Good evening, everyone. My name is Hanish, and I would like to thank ClearTax for giving me this opportunity to address all of you on certain aspects relating to GST compliances. Now, the topic which I'm going to discuss today is not about due dates of GST returns. I'm sure there enough and more material available online to see what are the due dates for different types of returns, whether the value is more than 5 crores, whether the returns, the turnover limit is less than 5 crores. So, what are the due dates? But what I'm going to take you through today in today's session is the due dates which are in relation to different actions which are required to take as far as GST compliance is concerned, and what happens because of the lockdown situation. All right, so we'll go to our PPT and all right, so you can see the first slide there. Now, first thing on the returns, if you observe the latest extension notifications, any person having a turnover more than 5 crores, no extension in due dates have been given. But if your turnover is less than 5 crore rupees, then staggered due dates have been suggested with a with a very important and a subtle point there, that if you file those returns within those staggered due days, then the interest will not apply. But if you don't file your returns within those staggered due dates, but by 30th of September, then interest will be applicable up to the date of filing, not beyond 30th September, at the rate of a concessional rate of 9% only. And if you don't file the returns by 30th September also, then the regular interest rate of 18% will apply. Now, members might recollect here, in the earlier GST returns extension due date notification and the circular, what was suggested is, if the returns are not filed within the revised due dates, then 18% interest will be applicable from the original due date. But now they have clarified and also made the amendments in the notification to provide that this 18% interest will be applicable only if the taxes are not paid and returns are not filed by 30th September 2020. So I am sure it would be of lot of benefit to trade community to use this opportunity to avail the loan from the government in the form of delay in payment of GST, which will be liable to interest at the rate of 9% only. All right. If we are under composition scheme, then we are required to file a annual return in GSTR 4. Recently, the due date for that also has been extended to August 31, 2020. All the other returns which do not find a specific extension, all of those, including the TCS, TCS, ISD, have been extended to August 31, 2020. Now, one very important notification which was issued is notification 35 of 2020. The notification mentions that if there is any action which is pending from a taxpayer from 20th March 2020 to August 30, 2020, the due date of all those actions gets extended to August 31, 2020. So, except barring a few compliances which a taxpayer is required to take care of, and we will discuss about those also at later point in time. Apart from those actions or compliances under the GST, all the other compliances which a GST taxpayer is required to observe and which falls due between 20th March. This day is important because that is the day when the lockdown relating to COVID actually started. So what government has done here is they have understood that uh, from 20th March 2020, nobody was legally allowed to go to their offices because the country was in lockdown. So there could be cases where the digital signature is at office, all the data, all the accounting related aspects, all the documentation are at offices, and the assessee or the taxpayer may not be able to go to office for the purpose of collecting all these documents and filing it with the GST department. So what they have done is, they have, for the period 20th March 2020 to August 30, 2020, whatever due dates you could think of, apart from a few which I mentioned that we will be covering at a later point in time. Apart for few exceptions, all those due dates have been extended to August 31, 2020. Right? And also a amnesty scheme or a penalty waiver has been issued if you have not filed the GSTR 3B for the period July 2017. Yes, from the beginning of GST, that is July 2017 to January 2020, if you have not filed your GSTR 3B, but you are able to file within the next 3 months, that is July, August, or September, then if your return carried any tax liability, then a nominal penalty of 500 rupees. But if it did not carry any tax liability, then penalty will be zero. So I would suggest, if you have not filed your 3B because you were not in operation or for whatever reason, please file those returns quickly so that you can avail the benefit of this penalty waiver scheme. And yes, so the chat box is open. You can continuously, at any point of time, wherever you have questions, you can post your queries, and I will, if the question is related to the topic, at that point in time itself, solve those queries or answer those queries. And if I think that I can take it at a later point in time, then I will note down those queries and I will answer those at a later point in time. So please feel free to drop your queries in the chat box. Or if anything is not clear, or if you want me to repeat something, please feel free to use the chat box and I will revert to all your issues. Next, another question which comes up for consideration is, what is the due date of filing of refund? Or can I file the refund claim for the year 2017-18 even now? Members will appreciate that GST allows for a time limit within which refund can be claimed. The time limit within which refund can be claimed is 2 years from something called as a relevant date. We'll not get into what is the relevant date, because for different scenarios, different date has been prescribed as the relevant date. Now, what do you mean by this relevant date? For just a summary of it, it means a date from which 2 years will be calculated. So if I have paid extra GST, then from the date I have paid extra GST, 2 years will be calculated. Within that period, I am required to claim refund. Otherwise, the refund gets time barred, right? So if I have some amount which I have to claim as refund, the refund could arise because of multiple reasons. Because I am exporter and I have to claim credit of input tax and claim refund of that input tax, or I have made excess payment, or in case of deemed export, I have charged the tax and I am required to claim refund of the tax which I have charged. So refund could arise out of multiple reasons, or in case of a CGST SGST transaction, I have charged IGST by mistake. So there could be multiple reasons why I might want to claim refund. Section 54 says that you have 2 years time to claim the refund. Now visualize a situation where you are required to claim refund for the month of March 2018. We are not talking about the entire year of 17-18, but we are talking about only March 2018. The due date for filing the refund claim, assuming that the return was required to be filed by 20th of April 2018, then from 20th of April 2018, 2 years will be calculated, because relevant date for that refund was the 20th of the next month when the return was being filed in Form 3B. Okay, so the due date for claiming the refund was April 19, 2020, which is exactly 2 years from April 20, 2018. So that is the time period which has been given. But if you observe, even if I wanted to file the refund claim, I would not have been able to file the refund claim, for the reason that we were in lockdown and maybe DSC is at office, though all the data is available on the laptop, but the DSC is on in office, so I'm not able to file the refund claim, right? Or it could be that the DSC has expired, but I am not able to speak to the vendor and get my refund claim, right? And get my DSC renewed. So there could be, or a chartered accountant certificate is required, or a declaration is required, which I'm not able to get the signature of the authorized signatory. So there are invoices are required to be uploaded, which for which the hard copies are in office. So there could be reasons why I am not able to file the refund application. Now, what this notification 35 of 2020, which was amended recently also, says that the due date of your action falls between 20th March 2020 and 30th of August 2020, and hence the due date gets extended to August 31, 2020. So even if you have not filed the refund claim even now for the year 1718, at least for the month of March 2018, you still have an opportunity to claim the refund. So if you have missed out on claiming any refund, I would suggest you to immediately file a application for refund. Okay. Also, there has been a circular which was issued recently which said if the refund application is rejected by the officer, in that case you have, because a deficiency memo has been issued, then you are required to file a fresh refund application, and the time limit will be based on the time you will be considered by considering the second refund application which you have filed. So example, March 2018 you filed the refund application by say March 2020. All right, within the due date you have filed without using the extension notification which was subsequently issued. So by 19th of March 2020 you were able to successfully file. But now what happened, the officer rejected it because you had or issued a deficiency memo because you did not upload certain documents which you were supposed to upload. All right, now when he rejects, you are required to file the refund application again. When you file the refund application again, this will be treated as a fresh refund application, and though you have filed it on say 25th of March, now once you file it on 25th of March, which is well within the due date, then the extension notification helps you to get you some more additional time, and because of which the refund filed by you on 25th of March is also within the due date only because of this notification 35 of 2020. So this is, though COVID has been really very negative for all of us, but one silver lining in this negative aspect is that your time period for claiming refund for the month of 1718 is still available with you. Now we go to the next slide. Okay. Next issue is, I think I've got some queries. Hello, Naresh. Naresh has some query. Sir, if GST return not filed, then why to show in GST return with status of filed return? No. I'll get back to you, Naresh. We have a separate slide for this. Uh, Ranjit says, can we claim ITC for 17, 18, 18, 19 if we file 3B now? Very good point, Ranjit. Ranjit's question is that, sir, there is a scheme which has been issued for non-levy of penalty. So I will file the return, okay, for the year 17, 18, 18, 19, and there'll be no penalty. So without penalty, I will file the return. But one thing, Ranjit, only penalty has been waived, so interest will be applicable. But Ranjit's question is next step. He says, okay, penalty is not there, or 500 rupees is the penalty, interest I will pay. But against my output tax liability, I have an input tax credit claim also. Can I claim that credit when I'm filing the 3B for the month of July 2017, which I'm filing in July 2020? So his question is, can I claim the credit? Now the department has started issuing notices saying that as per section 16 subsection 4, the credit is required to be claimed within 6 months from the end of the financial year. That is what Naresh has also highlighted. Within 6 months from the end of the financial year, and for the for the year 1718, that was extended to March 2019. Okay, so the point is 31st March 2019. The point is now, am I claiming the credit now, or have I claimed the credit at that point in time, but I'm merely reporting that in the returns now? Okay. In my view, there are two things: availment of credit and reporting of credit. As long as I have availed the credit in the books, okay, as long as I have availed the credit in the books, but I am filing the 3B now, I think we should be eligible to claim the credit, because 3B is only a statement. It is not a dynamic statement like GSTR 1, 2, and 3. It is merely a statement where I reflect what is there in my records. Okay, there are umpteen number of case laws under excise and service tax which says service tax returns and excise returns are merely procedural. As long as the person has claimed the credit in his books, it is as good as he has availed the credit, and that time limit will not apply. I think the same logic can be applied here as well. In fact, the members will appreciate that recently the High Court in case of Bharti Airtel said that Bharti Airtel could not avail the credit because they were waiting for GSTR1, GSTR2, GSTR3 mechanism, which was promised by way of notification circulars and the act, and they ended up paying more amount of money. Now, if they would have got to know this mechanism of GSTR 1, 2, and 3 and it would have come on time, they would not have paid that much amount as cash because monthly reconciliation would have been possible, and so they would have been able to avail more credit. Now, the money which they have paid excess against the credit which they have availed in the future, the High Court in fact goes on to say that this can be available as refund. This is to be allowed as a refund to Bharti Airtel. Taking that logic, though the issue was not the same in the writ petition which was filed, taking that taking note of this decision, we can also say that even courts agree that even if I have subsequently taken the credit, I will be able to give impact of that as on 31st March 2018 or to the 31st March 2019. So as far as your question is concerned, Mr. Ranjit, I think we will be able to claim the credit. Will department issue notice? Yes, they will be issuing the notice. Right? Okay. The next slide is all about departmental notices itself. Okay. All the notices or all the orders which are passed in GST require response within a particular period of time. And if I don't reply within that particular period of time, action is taken against me, including cancellation of registration or recovery by attaching my bank account or garnishee orders to my customers. So I have to respond to all these notices or all the orders in a time bound manner. But how can I be expected to reply to these notices and orders when I'm sitting at home because of instructions of the central government and the state government? Now, here again, this notification 35 of 2020 will come in handy, which says if there is any due date which requires you to take any action, then all that action gets postponed to 31st August 2020, which means that even in case of orders and notices, even if we are getting umpteen number of calls from the department to respond to, if we are not in a position to respond, then we can take shelter in the 35 of 2020 and say that look, all the due dates have been extended to 31st October, 31st August, and it will take me some time to reply to your notices. So I am going to come back to you only by 31st of August 2020. All right. But here again, if you see the wordings of the notification 35 of 2020, it talks about returns, it talks about actions, it talks about statements which are required to be submitted. But when it comes to summons, say some summons are being issued for some investigation, then I doubt this 35 of 2020 can be used, which means that in case of summons I might have to appear. Now how practically I will be able to appear looks very difficult. Like one of our client cases, the client is in Bombay, and the client is in sorry, head office in Bangalore. They have a branch in Bombay, and very limited transactions are done because of an investigation. A summon was issued, and Bombay was in lockdown at that point in time. Bangalore, there was a free movement which was available, but summons were issued or served to appear in Bombay, and we were not able to go at all because from Bangalore to Bombay it was not possible to go at that point in time. So we filed a letter that because of the current situation we are not able to travel to Bombay, but once the situation improves, definitely we would want to be part of the investigation process, and whatever is required to be given by us, we will definitely cooperate on the same. Third, conducting of audit. Again, the lockdown restriction says that we have to maintain social distancing and all the other things. So conducting audit, I think, would get postponed. Wherever notices were issued also, a letter has been sent uh, saying that because of the restrictions imposed, we may not be in a position to entertain you at our offices because we are ourselves working at 33% capacity, and the team is already busy with complying taking care of the compliance over the last 3 or 4 months and the work pending for the last 3 or 4 months, and hence we may not be able to give details to you if you come down for audit. One important point which I want to bring up here is there are there is taxation ordinance for relaxation of due dates in service tax and excise, and there is notification 35 of 2020 in GST. In case of service tax and excise, the due dates have got extended to 30th September. Okay, but in GST it's got extended to 31st of what you say August. But one point which we have to note here is in service tax and excise, the time limit within which notice could be issued is 5 years from the date of filing of returns. So if we talk about service tax returns for the year 14-15, that is October 14 to March 15, the due date of filing this return was 25th of April 2015, and if they had to issue a notice to me within 5 years, the last date was April 25, 2020, which is already expired. Now, like we have got certain benefits of extension of due date, department has also got some extension of due dates. Now, because the due date of issuance of notice was falling between 20th of March and 30th of August, the due date gets extended to 31st of August 2020. But one important point to note here is that they can continue the proceeding during the extended period. They cannot initiate a new proceeding. So in case you have not received a notice, okay, or the audit has not started before 20th of 24th of April 2020, then using this extended period, a notice for starting the audit and then issuing a show cause notice may not be possible, because the words used are under the extended period they can continue the proceeding, they cannot initiate a new proceeding, right? Then wherever possible, my friends, I would suggest you to take online hearing. Officers are also accepting whichever mode is available with them. Like today I was in a personal hearing with one of the officers in Belgaum through a webex call, and the day before that with the customs Bangalore on a regular phone call, which so what happens is we don't have to travel. The PH record is sent to our email, and we confirm that, and then that goes as part of the file and the order is passed based on that. So I would suggest you to use that online hearing also as another option to respond to department notices. Right. Now I think this was the question of I think Naresh. Okay, and I'll cover that in the next part now. Okay, now if the GSTR 1 due date and GSTR 3B due dates have all got extended, okay, that means my vendors are not going to file the returns. If the vendors are not going to file the returns, how do I claim the credit? Because one of the ways or manners of claiming credit, one of the conditions, I'm sorry, for claiming the credit is under Rule 36(4), that I should find out what is the credit available to me as per books and what is the credit available with me as per GSTR 2A. From the GSTR 2A, I have to remove all the ineligible credits. Whatever is the eligible credit as per GSTR 2A, I multiply 110% of that. On that 110% of the GSTR 2A credit, I am, or the credit as per books, whichever is less, is available to me as GST credit to be taken in the GST returns. Now, if none of my vendors are going to upload the returns because everybody wants to take the extension as they were not in operation, how do I claim the credit? Luckily, a relaxation has been given to Rule 36(4) as well, where they said that if you are filing the returns from the month of March 2020 to August 2020, okay, you can claim the credit as per your books. Whatever is the credit eligible to you, ignoring 36(4), you can take the credit. Okay, and in the month of September, cumulatively you have to check whether you have satisfied the conditions of 36(4) or not. So this is one welcome move by the government by relaxing the requirement of Rule 36(4). So I will claim the credit based on other conditions. See, other conditions have not been relaxed. I should have received the goods. It should be a eligible credit. I should have received the invoice. All those conditions I will have to satisfy. Once I've satisfied all those conditions, I will claim the credit. Okay. But in the month of September, cumulatively, instead of doing it on a monthly basis, cumulatively, I will do my input tax credit reconciliation with GSTR 2A. And if there is any extra credit what I have claimed by applying GSTR 2A cumulatively under Rule 36(4), okay, I will have to give back that credit. But if there is shortfall, okay, if I've claimed excess credit, then I will have to pay it back. No interest will be applicable in my view. But if there is a shortfall in the credit, I will be able to re the differential credit which I have not taken, I will be able to avail that in the month of September. So assuming on a cumulative basis the credit available to me was 1 lakh, but I have taken only 80,000, I can claim 20,000 in September. But if I've claimed 1 lakh 30,000 and utilize the credit also, in that case I will have to give back at, if I've utilized then I will have to pay the interest, but if I've not utilized then I'm not required to pay the interest. Okay. Now, what are the other compliances which are extended? Reversal under Rule 42. Whenever I am supplying goods or services which are liable to tax, and I'm also dealing with goods and services which are not liable to tax, then on the common credits I'm required to reverse credit in the percentage of exempt turnover divided by total turnover. And this reversal I can do it in the month of April or by September. And when I do it in the month of September, I have to pay interest from April. All right. So there is a 6 months interest which is required to be paid by me. But now in this case, because the due date again of notification 35 of 2020, because the due date falls during this 20th March 2020 to 30th August 2020, I would believe that I can still reverse the credit under Rule 42 by 31st of August 2020 without any interest. So you might keep your workings ready and reverse the credit at least by 31st August, which would mean that you are not required to pay any interest. Second, on 1st April 2019, a lot of notifications were issued as far as real estate developers were concerned. And they were said you are now required to pay tax at the rate of 5% and you will not be eligible for any input tax credit. Another condition which was attached is that you have to ensure that 80% of your procurements are from registered persons only. And if the purchases from your registered person is below this 80%, then whatever is the purchase you have made, so assuming you have made a purchase of 70% from registered dealers, then 80 minus 70 on that 10% you are required to pay tax at the rate of 18% under reverse charge mechanism. The due date for that was 30th June 2020, and the government was supposed to issue a what do you say return in which you had to report all these transactions. Instruction was issued to say that no return is going to be created for this purpose. You can include this in your GSTR 3B and file it, the DRC 03 and file it. Okay. Now my point is this was a return which was required to be filed, and by way of instruction we have been told that you do it by way of DRC 03. But the original requirement under the law was for me to file a return, and wherever the returns have not been extended, the notification 35 of 2020 will be applicable. And so this compliance also gets extended to 31st August 2020. So I'm not required to pay any interest on this RCM payment as long as I'm able to make it by 31st August 2020. Third, if I am in the business of export of goods or services without payment of tax, then I am required to furnish a legal undertaking. Okay, that I will receive the convertible foreign exchange, I undertake to export the goods, and all those other things. Okay, this letter of undertaking has to be renewed on a yearly basis. That means of 31st for the year 2021, I should have applied for and receive this legal undertaking even before I raise a first export invoice. But again, because of this lockdown, the due date for the same has been extended to 31st of August 2020. Next important point is, now because of this issue of lockdown, the business has severely impacted, and there are lot of cash flow issues, because of which I'm not able to make payment. Because I'm not getting payment from my customer, I'm not able to make payment to my vendor. One of the conditions for availing input tax credit is I should make the payment to my vendor within 180 days. And if I don't make the payment to my vendor within 180 days, then I have to reverse the credit along with interest from the date I avail the credit. Okay, and I will be eligible to claim the credit only when I make the payment. Now during this period, definitely there are going to be a lot of defaults as far as 180 days is concerned. Nobody will be able to make the payment within 180 days from the date of raising of invoice by the vendor. Now what happens in this case? I would believe that this 35 of 2020, we might be able to stretch a little and say this is also action in GST. Okay, again this is litigative, but we can take a position that this is also action which I am required to take in GST for the purpose of availment of credit. And because the due date of this 180 days falls during this 20th March 2020, our lockdown period, so the due date gets extended to 31st of August. And as long as I have made the payment within 31st of August 2020, I am not required to reverse the credit with interest. So that is some benefit which we may be able to claim. Okay, then in case of job work, if I have transferred inputs, I am required to get those goods from the job worker within 1 year's time. And if it is capital goods, then I'm required to get back those goods within 3 years time. If the due date of this 1 year and 3 years falls within this lockdown period, okay, even there the due date gets extended to 31st of August 2020. Right. Let's see if we have any questions. Right, no questions as of now. Now we were also discussing about there are certain provisions which have not been extended at all, right? For the due date for which is not extended. So time of supply, that is raising of invoice. I cannot say that I was supposed to raise invoice within 30 days from the date of completion of service, right? And the due date falls during the what you say lockdown period, and so the due date of raising of invoice also has got extended. So this provision is not applicable for time of supply and value of supply. This provision is not applicable for registration. If you have crossed the threshold limit of 20 lakhs, then you are required to apply for registration within 30 days of the day when you are liable to register. You cannot say that this 30 days falls within the lockdown period, so I have time till 31st August to register. Likewise, tax invoice, what we mentioned, then detention, seizing, and release of goods. For all these purposes, also this extension does not apply. There are few other provisions also which I thought were not relevant for today's discussion, so I have not highlighted those. Example, casual taxable person to regular taxable person, if you want to shift, then this time limit is not this time extension is not applicable. Like so there are few other provisions not relevant, so only important provisions which I thought are important for us to discuss in today's meeting, that is what I have highlighted before you. Okay. Now, a few other questions which I thought will be relevant in today's situation are what happens because of this lockdown? There could be different business situations. There could be a case where advance has been received by me, okay, for a service to be provided to my customer. But and I have paid service tax, GST also on that because the underlying transaction was a service. Now the contract has been cancelled. Okay. Now, when the contract gets cancelled, I will refund the amount along with GST, assuming that is the agreement which I had entered into. That he will pay me an advance of 118 rupees, 100 rupees being the value of service and 18 rupees being the GST, and he cancelled. So I refunded the entire 118 rupees to him. Now I have already paid 18 rupees to the government. What do I do with this? If I'm able to adjust that against my subsequent liability, then that option is always available. But if I'm not able to adjust that, I will be able to claim refund of the same. It has already been clarified by way of a circular also. Provisions were there, but circular has also clarified it. Second, if I have dispatched certain goods to my customers, okay, say for Holi, okay, there was some metal which I have sent. But because of this lockdown, nobody is able to celebrate Holi, and all those material is still lying at the check post. Okay, now the customer says, you take back your material, I don't want, because the season has gone. Okay, in that case, when he returns the goods back to me, I can issue a credit note, and whatever taxes I have paid to the government, okay, at the time of raising of invoice and reporting of those invoice and the returns, I would have paid the taxes. Okay, when I raise a credit note, I am supposed to get back that money from the government, that can be adjusted against my future tax liability. But if I don't foresee that much amount of liability in the future, then even then I will be able to claim refund of the same. Okay, third case, assuming I have a customer who is supposed to make the payment to me within 30 days. Okay, he did not make the payment to me within 30 days because of the lockdown. Okay, now because he delayed the payment by 30 days, I charged him interest. Let's not get into, why did you charge interest at this difficult point in time. Assuming, as far as my business practice is concerned, he did not pay me, so I've charged him interest. Okay, at the rate of 12%. Section 15 says, if you have charged interest from your customer for delay in payment by him, that also will suffer GST. So, on the interest what you're collecting from your client, from your customer, on that interest also you're required to pay GST at the rate of at whatever rate the product is. If the product is liable to tax at the rate of 12%, you'll have to pay 12%. If the product is liable to tax at the rate of 28%, you'll have to pay 28%. You can raise a debit note, charge the interest along with tax, and the other person, if he is eligible to take credit, he will be able to take the credit also. Okay, now another question, I supplied certain material to my customers. Okay, but he was not able to sell and there is a slowdown, so I also understand that he will not be able to sell at the price at which I have given him. Okay, so what I do is I give him some additional discount. So I sent him goods worth 1 lakh rupees and charged him a GST of 18%. Now we negotiated and I had to give some additional discount to him, so I gave him a discount of 20,000 rupees. Can I issue a credit note for 20,000 and also reverse the GST on the same and issue it to him? Section 15 recognizes only two kinds of discount. Discount which is shown on the invoice. I did not show the discount on the invoice because it was after sale activity. And discount which is, communicated to the customer before the sale. But this was not a discount which was communicated to the customer before the sale. So these will be financial credit notes, which is credit notes for the value without impacting GST. So I will raise an invoice of 1 lakh plus GST, and if I have to give a discount, I can give a financial credit note of 20,000 rupees. There will be no impact of GST on the 20,000 rupees. Okay, next, expiry of goods. I sent some material to my customer which had a shelf life of 3 months. Now before it could reach the customer, or assuming it has reached the customer also, okay, but he was not able to sell it within 3 months time, what will he do? There are multiple scenarios available here. In case of say pharma company, the expired stock comes back to the pharmaceutical company only, because they are required to destroy it in a particular way prescribed by the government. So assuming the distributor sends the goods to the pharma company, he will have to, the pharma company will raise a credit note based on which the goods are coming back to the pharma company, and the pharma company will be writing off or destroying these goods. So in the hands of the pharma company there will be a credit loss. But assuming there is no practice of sending it back to the manufacturer, if the goods are lying at the retailer and it is his responsibility, if the goods are expired, he cannot give it to anybody else. On the day he writes off that stock, because those goods are written off, and he disposes them, meaning throws them off. Okay, he will have to reverse the credit. So you will observe in this lockdown situation, there will be a lot of goods, especially items of eatables, okay, or ready to eat packets, which will be expired, and your clients, or if we have some traders who are listening to us, they will have to reverse the credit. Okay, next, insurance claim. During this period, if there are any damages, or if there are any reason why you will be able to claim insurance, okay, from your insurance companies, you will get the money from insurance companies it is not liable to GST. Like in GST, every money you receive is not liable to GST. There has to be a corresponding supply. So if you receive any insurance claims from your insurance companies, you are not required to pay GST on the same. Okay, I have skipped one point. I remember that. I will come back to it a little later. Okay, then you have say suppose you are a grocery store owner and two people who are from a very humble background and who are not able to make their ends meet, and you are providing them groceries which are liable to tax, okay, assuming branded wheat or rice, something. Okay, if these are inventory items on which you have already claimed credit and you are giving it free of cost to them, then please remember the implications under schedule 1. This will be treated as a supply even though without consideration, and you are required to pay output tax on the same. But say suppose you are not dealing in something like face masks, you purchase it and you give it to your customer. In that case, you are not required to pay GST on the output side, but you are required to reverse the credit. So I will repeat again: if it is an inventory item which you are giving to your customer, you will have to pay output tax because you have claimed input tax credit schedule 1. But if it is not an inventory item, okay, then and you have not taken input tax credit, then you are not eligible to take input tax credit, and you can give it free of cost to anyone who you think it deserves that. Okay, apart from that, I think a lot of cases where employees have been given benefits in benefits in the sense they can set up a office at their house itself. So money has been given for buying chairs, for buying something which can help support the laptop so that the posture is correct. Or internet bills have been sponsored, like okay, 1 GB is available to you regularly, you take another GB, okay, for your mobile data, and you use that for office purposes. Now can the companies who have incurred this additional expenditure and reimbursing this cost to the employees can claim GST charged on this, as long as the invoice is in the name of the company and the GSTN of the company is mentioned on that invoice. You will be allowed to claim the credit even though the delivery of those goods have happened at employee address, because the eligibility is not based on the delivery address, it is based on whether you have received or not. Employee here acts as an agent. If he has received the goods, it is as good as you have received the goods, and you will be able to claim the credit. Last point which I want to discuss here, which I had skipped, is raise cross-charge invoices to branch for credit transfer. So assuming you have a head office in Bombay and you have branches located across India, okay, and in Bombay, because you incur maximum expenses, all the credits are sitting in Bombay, okay, and you have branches situated across India. What you do at the end of the year, you transfer the credits by way of raising an invoice called cross-charge. In this situation, if you are required to pay taxes in cash in any other branches and you have extra credit in your head office, don't wait for that cross charge invoice at the end of the year. You raise it on a monthly basis or on a quarterly basis so that you transfer the credits from the head office to the branches, and branches are not required to pay taxes in cash. They can utilize this credit to discharge their tax liability. This is what I had for you. I will take some questions. Mr. Sanjay has some questions for us. I will just check those. My supplier given me C. Sir, my supplier given me C for discount receipt for goods written now. How I show in books for less tax? Sir, can you claim GST in vehicle and insurance or any other expenses? Okay, Sanjay, I'm not sure if I got your question right, but what you're asking is if your supplier has given you credit note for discount received for goods returned, how can I show it in the books? Okay, now see, if your supplier has given you a discount for goods returned, okay, he cannot give you a discount, he will have to give you a credit note for the full value of the invoice. Okay, and if you have already claimed the credit, then you will have to reverse that credit. Okay, then second question is, can I claim GST on vehicles and insurance or any other expenses? Section 17 subsection 5 clearly says that if the vehicle has a sitting capacity of 13 or less, then you will not be able to claim credit on that vehicle or the insurance or any other expenses relating to that vehicle. But if it is more than 13, or if it is a goods transport vehicle, then you will be able to claim the credit. Certain exceptions have been given if you are a distributor in those vehicles, or if you are using that for training purposes, that is your driving school, or if you're using it for passenger transport, in that case you can claim the credit. But assuming you're a chartered accountant, or if you are a software company or a manufacturing company who is using it for the purpose of transportation of employees from point A to point B, which is not a taxable supply, then you will not be able to claim the credit on the same. Right? If you have any questions, I'll keep this session open for a couple of minutes. Otherwise, we'll close the session. Whatever I had to discuss on the topic, I have already discussed. All right. I think we don't have any more doubts. So thank you very much for taking your time out and listening to me. Thanks a lot to ClearTax again for giving me this opportunity to interact with you. Thank you, everyone. Thanks a lot.